Hello, Tim Tucker here from United Way Central Ohio Tax Time Training. In this video, we're going to cover multiple state residency, where the taxpayer lives part year in Ohio and part year in another state. The topics that we'll cover in this video are as follows. We'll learn how to fill out an Ohio income tax return as a part year resident of Ohio and part year in another state. And we'll make our best effort to fill out the state income tax for the other state that the taxpayer lived in. In this case, we're going to use Kentucky as our example. I will add the caveat that most of us have little or no expertise on state income tax outside of Ohio. Here is a high-level summary of the steps we'll follow. We'll start by preparing the federal return as normal. Don't bother with any Ohio details, as our next step is to delete Ohio from the return. We will then immediately add Ohio back to the return, and when we do this, we'll get a choice to add it in as a part year resident. We will then add the Ohio-specific items to the return, such as retirement income credit, business income deduction, anything else that's a special Ohio return adder. We'll then fill in the fields in taxpyaer for the part year return, which will populate the Ohio ITNRC form. That's the Ohio non-resident credit calculation. We'll then do a quick sanity check that the ITNRC looks correct. We'll then add additional state or states where the taxpayer lived during that year. And then finally, we'll make our best effort at filling in the information needed for these other states. Let's go through a simple example. In our example, the taxpayer lived in Kentucky the first 6 months of the year, then moved to Ohio for the remainder of the year. During their time in Kentucky, the taxpayer earned $35,000 from a W-2 job. The taxpayer then moved to Ohio and earned another $35,000 from a W-2 job while a resident of Ohio. So let's take a look at how to enter this information into taxpyaer. The first step in the process is to prepare the federal return as normal. So that's what I've done here. I've got the federal return prepared, and I will show you what the W-2s look like that I put in there. I put one W-2 in for an Ohio company with wages of $35,000. I put in a little amount of Ohio's income tax withholding, $300. And then I've got a second W-2 from our Kentucky company, also for $35,000. And I put in a small amount of state income tax withholding. The next step is to delete the Ohio return. So I will go to the state section and select Ohio and delete it. Next step in the process is to add back in the Ohio return. So we will click on Add State Returns. And then you can either use the pull-down box to choose Ohio, or you can click on the map of Ohio. It will fill it in automatically. Click Continue. Now here's where we get the choice to select part year resident, which we didn't have before when we first started the return. So we'll click part year, continue. It will add the Ohio return. Now you will need to go into the basic information and fill in the fields that it actually prompted you for when you did the new return, such as the county and the school district. So we'll go edit, and we'll edit the county and school district information by clicking this begin. So in this case, our resident was Franklin County, and I put them in Westerville School District. And click this done box for saying we verified the edits to be correct. Now, it should fill in the residency status as part year. If not, you can do that by yourself. Now we have to enter the dates of residency. So we're going to select when we moved into Ohio. In this case, we lived in Ohio for the last 6 months of the year. So that would be 7/1/2023 to 12/31/2023. And then it's asking for the other residency state if you selected part year. And we will click continue. The next step in the process is to add in any special Ohio adders, such as retirement income credit or military pension deduction or business income deduction. In this simple example, we don't have any of that, so we're going to move on to the next step, which is to start entering the data for the Ohio non-resident crack calculation. Let's move on to the next step and fill in the fields that will then translate into the Ohio non-resident credit calculation. So since it's a credit, we will click on the credit section in the Ohio return, and then we will click on non-resident credit calculation. Frankly, this form confused me when I first saw it. They're asking for numbers like wages and capital gain in the non-resident credit calculation, but what wages? The wages while I was a non-resident, the wages while I was a resident, or the federal wages? Confusing without more words here. So I think it helps to look at the form that this is actually going to populate to understand what they really want. So if you look at the Ohio IT NRC form, you'll see that there are two columns. There's a federal amount and an Ohio amount. And the way this works is you're going to be telling the taxpayer how much you earned in Ohio. Then taxpayer is going to sum that up. It's going to then subtract your total Ohio income from your Ohio adjusted gross income. And then it's going to come up with how much income you earned as a non-resident. Then it's going to take a ratio of the non-resident income to your Ohio AGI, and that fraction is then going to be used to calculate a tax credit. So going back to taxpayer, the numbers that they're asking for, if they don't explicitly say Ohio or federal, they're asking for the Ohio numbers. So in this case, the wages means what were the wages earned while in Ohio? Now, in our case, we know we earned $35,000. I'm going to put $35,000 there. There are some other cases where they actually want you to explicitly put in the federal amount and then the Ohio amount. So that's a little bit clearer. There are cases where they'll say Ohio amount, like for pensions, annuities, and they say that the federal amount was calculated based on what you already put in for the federal return. So it's fine. In some cases, scenarios that are a little bit more complex than our simple scenario, you may have to do some prorating. For example, if you got bank interest for the year, how much to allocate to Ohio, how much to allocate to the other state. Typically, you would just do a prorating. If you lived in Ohio for 6 months of the year, then you would allocate half of your interest income to Ohio. Similar for pensions, and those also have unemployment compensation. You would have to calculate how much you actually received while a resident of Ohio. So again, for our simple case, all we have is wages. I put in the $35,000 and now I will click continue. Let's go ahead and generate the PDF of the Ohio return to look at the ITNRC form. So we'll click back and exit. And if we click the printer icon here, it will generate the PDF. And let's scroll down to the Ohio NRC form. So what we see on the NRC is it lists the residency dates that we had for Ohio. And under the federal amount column, it shows the total wages of $70,000, but $35,000 is allocable to Ohio. There were no other forms of income in this Part A, so the total sum for the Ohio income is $35,000. In Part B, we didn't have any of those income types like the interest or pensions, unemployment, so there's nothing in the Part B section. Part C is actually where the credit gets calculated. So it starts off with the Ohio AGI, which is the same as the federal AGI, $70,000. It brings down the $35,000 that comes from what we entered above, and then it subtracts the Ohio income from the total income to come up with the non-resident income of $35,000. It then takes the ratio of the non-resident income to the Ohio AGI and comes up with this fraction of 0.5. It then takes the 0.5 and it multiplies it by the Ohio Schedule of Credits line 35 to come up with the credit. So let's go back up to the Ohio Schedule of Credits. And you can see, so line 35 is the total tax owed to Ohio, which is $1,510. When we multiply that by 0.5, we get our non-resident credit of $755. And so it subtracts the 755 from the total tax to get a non-resident credit of $755. And then that carries back to the IT 1040 line 9, which is, it's a non-refundable credit. And in this simple case, if you recall, there were $300 of withholding for Ohio. So the total tax liability is going to be the 755 minus the 300, or $450. $455 is the amount owed for this taxpayer. Okay, so I'm going to leave this open because we're going to need a number from this when we go in and do the next return, which is the Kentucky income tax return. So we've done our sanity check on the Ohio IT NRC and things seem to make sense. So let's move on to the next step, which is to add in the return for the other state, which in this case, we're going to use Kentucky as our example. So into the state return section, I'm going to click on add another state return. And again, I can either go to the pull down box, choose Kentucky, or I can click on the map and click continue. And Kentucky is also going to be part here. Now comes the part where we have to do our best effort to figure out how to populate the Kentucky income tax return. So for Kentucky, after doing some exploring in these fields in TaxSlayer and also looking at the instructions for the Kentucky return, I realized we needed to go into basic information similar to Ohio and answer a few questions. So I'll answer no for member of the Kentucky National Guard and no for the federal extension. And now for the residence information, we'll say, did you move into or out of Kentucky? So we moved out of Kentucky because we were there for the first half of the year. So we moved in 1/1/2023, and we moved out at the end of June, 06/30/2023. And then we moved into Ohio. So we will select Ohio here. And I believe that's all the information that's needed in this section. So after doing a little bit more investigation, I found out that the place to fill out for Kentucky is under credits. So we'll click begin in credits. And what we want to do is click on the credit for taxes paid to another state. So I'm going to click begin and select Ohio. And then income subject to tax in both states. That's basically the total AGI, 70,000. I'm not sure about this type of income reported to the other state. I'm not sure why that would be needed. The only other field that I believe needs to be filled in is enter the amount of income tax paid to the other state. This is generally indicated as total tax on the other state return. So it's not the withholding. They make a point of that. So if we go back and look at our Ohio return, we see that the total tax liability, after that non-resident credit, is $755. So that's what we will enter for Kentucky, $755. Click continue, back, continue, Now, there may be other credits or deductions that are available for Kentucky. We are not experts outside of Ohio, so you may want to poke around a little bit to see if there's anything else that applies. I know some states have things like renter's credit, and just imagine, all the things that we have to know for Ohio that are not part of federal. These could be present in other states as well. So again, we just make our best effort here. So let's go ahead and generate the Kentucky return PDF and see if we can make sense of what got produced. So I will exit Kentucky and click the printer icon for Kentucky to generate a PDF. And of course, this most likely looks very foreign to you because it's Kentucky. We're not used to doing those returns. If we look down the return, I can see a credit of $755, which looks like the Ohio credit. So let me scroll down to the bottom of the return. I see there's a form for credit for taxes paid to other state worksheet, and it looks like it pulls in the tax paid to the other state that we entered for Kentucky, the $755, and then that carries to that form we just looked at, the first page of the return. So it looks like they calculate the tax that you would owe Kentucky based on the Kentucky income, and then they give you credit for the tax already paid to Ohio. And so your tax liability for Kentucky looks like $686. And then I know we had put $200 for tax withheld for Kentucky on the W-2. So it looks like the tax owed to Kentucky is $486. Again, there could be other credits and things that we're missing here. And ideally, if someone comes in with multiple state return, we would have extra time to work on the return. Maybe 2 sessions allocated for that person rather than just one. Some final points as we wrap up. Follow the high-level steps we outlined earlier. Try to allocate extra prep time for multi-state clients, as you may need to do some research in real time while you're preparing these returns, and you may need to reach out, say on Slack, to others for help if you can't figure something out. Do a sanity check on the state return PDFs to see if things make sense. You'll probably understand what you see on the Ohio return. For other non-Ohio return PDFs, you'll have to do a little detective work to see where the credits end up showing up. And finally, keep in mind that we're not experts for state returns outside of Ohio, so you'll just need to give it your best effort. Thanks for watching. I hope this was helpful. Links to our FAQs and useful websites are posted in the description below the video. Our Ohio Income Tax Adders FAQ has details of this particular multi-state return included if you want to see a written version. If you have questions or comments, leave me a comment on my YouTube channel or ping me on Slack or send email to timmythetaxman@gmail.com.